Every single day, we've been bombarded by information about Silicon Valley Bank, Credit Suisse, everything else that's been going on. They're calling it a banking crisis, and it has reverberations from 2008, 1929, and just about everything else you can throw in the mix. The question people have been asking is, what does this mean for me? What are they actually going to do about it? Yes, that bank is failing. I might not be a part of them or directly related to them in any way. So how does it affect me? What are the responses from the central banks and the governments? I'm going to show you that today. And I'll give you a little hint. They started to print a lot of money. That's very important to understand. Let me show you what's going on. The first thing is back in 2017, Fed's Yellen expects no new financial crisis in, quote, our lifetimes. June 27th, 2017. You might remember this one. And during 2017, what they used to refer to as the Goldilocks period, because it was just right. Everything was perfect. Every single month throughout the entire year, the stock market went up. There was no end in sight to the stock market bouncing, the economy doing so well. Everything was great until they decided that they were going to tighten up a little bit. And 2018 was a very different year. So here I show you what Janet Yellen had to say back in 2017 and what's she saying now. Treasury Secretary Yellen said that the government could backstop more deposits if necessary to stop the contagion. If you remember, certainly, she's been bouncing around. I guess she's getting word on what she's allowed to say and so on. Initially, it was, we are not going to back them. Then it was, we're going to back them all. Then it was, we'll back only some of them. Now they're just saying, whatever's going to calm the markets, whatever's going to calm people, that's just what we're going to say. Okay? So we don't know what they're going to do. I think ultimately they cannot backstop every bank, and they know that, but they just say it. And saying it is enough to stop people from going to the banks and running in many cases until there's pandemonium, until there's chaos. And then people go anyway because they don't trust anybody. And we see this particularly, in developing countries when something's happening. Maybe it's Lebanon, for instance. You might see it even in these cases here, just recently. But what is the response to this? Ultimately, in any circumstance, whenever there is a crisis, there is an opportunity. And that could be an entrepreneurial opportunity, where many people usually constrict and contract during this period. They go and hide because of their worry about what's happening. Others, they jump on the opportunity, but there's always going to be the government and the central banks that use it as an opportunity to devalue the currency. Now you might ask yourself, why would the government, why would the central bank actually want to devalue the currency? Well, it's because the currency is really just a unit of debt. And debt is the system of control. And they've been doing this for a long time, utilizing that to keep you in a certain boundary. And they go through cycles of monetary cycles that are there purposely. They don't have to create these cycles. They don't have to create the wild booms that they do, but they do. And there really is no reasonable explanation because ultimately that ends very badly. And today we're starting to see that. They decreased interest rates for so long. Now they're boosting that up. Or I should say then they brought that down with the interest rate hikes. As they were bringing those hikes upward, it created this, chaos that we're seeing today. And now, my friends, they're about to go in this opposite direction, which could result in you experiencing a world of hurt. And I want to show you more about that here today, just to give you a little bit of insight into SVB's loans to insiders tripling during the tripled to $219 million before it failed. Loans to officers, directors, the highest in 2 decades. The bank's weaknesses came to light as the loans surged. Isn't that so weird? It kind of reminds me a little bit of FTX, and FTX, very funny that we really didn't hear much about it after. I guess it's still going on and we'll eventually hear some stuff, but this was kind of the same thing in that regard, at least slightly. I'm not trying to link the two. I just find it so interesting that it's like, an escape hatch, and they're using it and they're walking out. They know what's going on. Of course, everybody internally knows what's going on, and that's why it is very important to watch what the insiders do. And you can see what the insiders do at any moment. You don't have to rely on Bloomberg and CNBC. Don't do that. There's a video inside one of the playlists that I have on my channel. And if you look, I think it's the e-course, it's called e-course. And if you look in there, it says like how to know when insiders are buying and selling, something to that effect. And you see that video there, and I explain it exactly step by step, the websites to go to, and you can check that out for yourself, okay? A financial banana republic, UBS Credit Suisse deal puts Switzerland's reputation on the line. Switzerland's standing as a financial center is shattered. This country will now be viewed as a financial banana republic. That's pretty extreme. But I think it's worth stating. Anxiety strikes the 8 trillion mortgage debt market after SVB collapse. Investors fear other banks will sell mortgage-backed securities, pushing down prices. You see? Because interest rates were rising, the value of the mortgage-backed securities that SVB, Silicon Valley Bank, were holding started to fall, and so they sold them off at a loss. And that was part of the reason that this became a crisis, okay? That's one aspect. But if the Federal Reserve is selling off their mortgage-backed securities right now, and they've been doing that for a few months, and other companies are going to do that as well, there's this massive pile of mortgage-backed securities sitting there that are going to become what they once were, and that is toxic assets. If you remember back in 2008, they used to refer to them as toxic assets. So what does this mean? What are they going to do? I'll tell you that in just a second. What do you think they're going to do? If the Federal Reserve is selling off and other companies start selling off because they know the Fed isn't buying them, what do you think is going to happen? Can you guess? I'll talk about that in just a second. I just have a little bit of a funny one to show you here. Our Kathy Wood sees a silver lining in $2 billion loss. Yeah, the fund lost terribly, one of the worst performing funds. I think they lost something crazy like 75% of the total. ARK can offset future capital gains taxes with fund losses. Can you believe this? You lose 75% of your investment, and she has the audacity to come out and say, I know you lost a lot of money, but there's going to be gains coming, and you could do some tax loss harvesting. Can you believe that? That is bold. That is bold. And people still having faith in this, it really is pathetic. It really is. I'm not saying the stock can't go up or whatever, but to come out there for years and years, just increasing the Tesla's going to be 5,000. Tesla's going to have, 1 million robo-taxis on the streets by 2020. All these different, they're just pushing so that more money can flow into the fund. And then ultimately you run into a situation like this that she didn't foresee. And well, yeah, I know there's a lot of losses there, but good news is you can do some tax loss harvesting. What garbage, what absolute garbage. And they keep inviting her on Bloomberg, on CNBC, and all these different things constantly. She's not going to lose. She is really not going to lose because people swallow that BS. And that brings me to the next issue. What is it that they're going to do? Well, they've already begun. We have to follow this trend. This is part of the money mirror method that I talk about. Think about this very carefully and how important this is. Here we have it. This is the Federal Reserve's balance sheet, which has expanded to a great degree in the last little while. You can see over this period, this is 2020 where I'm showing with my mouse here. It expanded to a great degree, you know that, and then over the next little while it's expanding quite a bit. Peaks out around April of 2022, maybe a little earlier than that, and then they start their quantitative tightening. All right, so they bring that down, barely gets anywhere. It went from not even 9 trillion to a bottom of 8.3 trillion. So barely did anything. And if I zoom in, you can kind of get a better look at that. And you could see for yourself, massive expansion. Now they're not buying the mortgage-backed securities, they're not buying the treasuries, but they are expanding the balance sheet. Now they're doing so different thing. This is the discount window. It's a whole different thing. But the fact remains is that in this case here, we are seeing the balance sheet expand. And if you take history as any guide, once it expands, it never contracts. They do it a little bit and they send it right back up. How about this? How about the next one? End of QT, ECB, the European Central Bank, balance sheet rose in the past week by 2.5 billion euro. Look at it. We're almost at 8 billion euro for this balance sheet. It was, almost 9 billion, but here we are, okay? Just think about it. The ECB's total assets now equal to 59% of Eurozone GDP versus the Fed's 33 and the BOJ's 133. None of them are okay. None of them. Even the Federal Reserve, 33%, it's not okay. It really isn't. So that's the ECB. Are there any more? Well, let me show you. Bank of Japan. Same situation. After a very brief dip, they have come back up. Do you see a trend here? The major central banks around the world have now begun their different policies of balance sheet expansion. Now, maybe 3 weeks from now, banking crisis is over. They've dealt with it. There's no concern. You're going to see the balance sheet start to decline again, and they can continue on with the higher interest rates and so on. That's a possibility. We are right now at that inflection point. So I can't definitively say which direction this is headed. But I look at the history, if it's any guide, is that when we enter into a crisis, they print and they print and they print. And they'll do that through different means. They're not going to always do the exact same thing. So you've got people out there that will say, no, this is not expansionary. This is not the policy that they had before. I realize that. I know that. I've read into it all. I've spent many, many hours reading about this in the last few weeks. And so what we have here is a different scenario. Like I said, we're at an inflection point. Know this, understand what's happening. The central banks are now expanding their balance sheets. And in general, when we see that, we see the stock market rise as a result. If you can see this chart behind me, that's the S&P. Mirrors perfectly. Mirrors perfect. Money mirror method mirrors perfectly with the balance sheet. It doesn't always work out like that. But in this case here, it absolutely did. So you watch that carefully and you will see what you need to do as an investor. Real assets, number one, the companies that are more safe and secure that have real fundamentals behind them, brand awareness that's everywhere, things that people don't give up during a recession, during tougher times, economic hardship, and so on. There's still things that people buy. People still buy toilet paper. People still buy household items. People still buy all these things, okay, whatever it is. I just use toilet paper as an example because that was funny during 2020, but you get the point. Maybe they don't need, some nonsense product, but they might buy the essentials. So keep an eye out for that if you're getting into paper assets. Okay, that's just what I wanted to describe to you today and what's going on today. I hope you appreciated this information. If you did, hit subscribe because we are headed towards 300,000 subscribers. And when we go to 300,000, we are going to do a live 300,000 party. So I want you all to be there. Of course, I'll see you tomorrow. Take care.